Hello and welcome to the status report overview of SKAGEN Kon-Tiki in October. Let's take a look at the highlights for the month. Kon-Tiki was up 6.5% in October, outperforming the MSCI Emerging Markets Index, which increased by 5.3%. Year to date, Kon-Tiki is up 10.2%, which is 8.9% ahead of the benchmark. One new position was initiated during the month, and we increased our holdings in 4 others. We exited completely from 2 companies and reduced our holding in 1 other. The portfolio remains attractively valued, both on an absolute basis and relative to both the benchmark and its own historic average. The fund's top 35 holdings, which together represent 3/4 of the portfolio, trade on a weighted price-earnings multiple of 7.6 times versus 11.4 times for the index, and we see weighted upside of 37% based on current target prices. Around half of our portfolio companies have reported third-quarter results, and while the figures themselves have generally been a mixed bag, more companies have surprised positively than negatively. One observation is that companies which have reported strong results have tended to be rewarded in terms of share price outperformance, and vice versa for those that have been disappointing. Looking at the markets more generally, even though emerging markets have outperformed global markets over the past few months, the performance gap year to date is around 20%. Emerging market underperformance is partly explained by falling growth expectations. Since the beginning of the year, GDP forecasts have fallen by around 0.7%, while they've remained broadly flat for developed markets. Another factor has been the Fed's plan to taper its stimulus program, which has triggered a capital flight from emerging markets and driven a sharp correction in both currencies and equities, particularly in countries with current account deficits such as Indonesia, Turkey and India. Now let's turn to the month's largest contributors and detractors. Hyundai Motor, Samsung and Great Wall Motor were the best winners during October. These 3 companies are also the best contributors year to date. Samsung announced third-quarter results with semiconductors and smartphones driving a 26% increase in profit. The cash pile also remains healthy and should eventually be a benefit to shareholders. The 2 motor companies also announced third-quarter results, and although Hyundai reported in line with expectations, Great Wall's earnings were a little below consensus forecasts. The Chinese company also announced a slight dip in margins, although we expect these to recover in the next quarter, and the business fundamentals, we believe, remain solid. On the negative side, Marfrig, Tullow Oil and CNH Industrial were the biggest losers in October. Marfrig, the Brazilian food processing company, announced 2013 guidance below expectations, while CNH Industrial, in its first earnings report following the merger between Fiat Industrial and CNH Global, announced third-quarter results below expectations, although it reiterated its revenue and margin guidance for the full year. Now let's run through the portfolio composition and have a look at what's changed. We received shares in REC Solar as it was spun off from REC. We continue to believe the solar industry is at an inflection point where prices have fallen sufficiently that the industry won't be dependent on subsidies to sustain it. We also participated in the share placings of Abengoa, the Spanish industrials company, and CCU, the Chilean beverage producer, in order to maintain our stakes in both companies. We continued to increase our position in Haitong Securities during the month, as we believe it will be one of the major beneficiaries of reform in the Chinese banking and finance sector. Finally, we continued to increase our position in DRB Hicom, as we believe there to be a lot of hidden value in the Malaysian company that should eventually be realised. Exiting the portfolio during the month were Techfin, where we had concerns about the company's ability to manage project risk, and Hellenic Exchanges, which was sold as the share price has increased by more than 70% so far this year. We also took some profits in Yingli Green after its share price doubled in a couple of months. That's it for this month. Thank you for watching, and for more information please visit the SKAGEN Kon-Tiki section of the SKAGEN Funds website.